Can you actually believe this? That Wall Street is already weighing on the potential market impact of Trump 2.0. Yeah, they're already doing their research. Because in the next couple of months, the United States will have another presidential election. You have Joe Biden, and then you have Donald Trump. Understand that Wall Street has already ran the scenario. They have already been entrenched in Joe Biden's presidency over the last 4 years. Now, what about Trump 2.0? How do you think the market is going to react if this man gets back into office? Well, as with everything with money, Wall Street is trying to get ahead of the game. They're trying to get a leg up as to, okay, what could we kind of expect if Trump gets back into office? How will the market act? Will it crash? Will it continue to go up higher in price like it's currently doing now today? Which market will go up? Which market will go down? Where should we focus placing our assets that we currently manage? We're going to focus on the dollar today, though. This article goes into the dollar and treasury yields. It doesn't really go into the stock market, but it really goes into those two aspects of instruments. Goldman Sachs. This is about Goldman Sachs look like. This is from MarketWatch. It's saying that 2024 US election has the potential to be a major market event. Don't you just love how these people drum up the excitement? It causes curiosity to come into your mind and just, man, major market event. What could they possibly mean? Are they saying a detrimental crash or an explosion in price, boosting the dollar and bond yields? Dominic Wilson and Vicky Chang, two people who work for Goldman Sachs. But this article will try to make you think that it's broader, that is all of Wall Street. No, we could pull that back a little bit. It look like it's only Goldman Sachs and two people who work for Goldman Sachs, Dominic Wilson and Vicky Chang. Two people. Now, they go off of what happened in the New Hampshire. They went back to the Iowa caucus to see what happened to the markets once it was determined that Donald Trump won that primary. In particular, they zeroed in on a 13-hour window after the caucus took place at 7 p.m. local time on the 15th of January, okay? And point out that the dollar strengthened against its major pairs by enough to look unusual relative to normal levels of volatility. So you're trying to tell me we have these two individuals looking at an Iowa caucus in 13 hours, and they're going to try to relate that to a major market event if Trump gets back into office for 4 years? You can't make this stuff up. It could be a plethora of other reasons as to why the dollar strengthened within that 13-hour window. Like, what about the other macro economic events across the world? They're trying to pin the strength of the dollar during that 13-hour off of Trump winning the Iowa caucus. That, to me, is illegitimate. That's wrong to do because the dollar is a global currency. What else is going on in the world right now that could impact the dollar and the strength of the dollar within that 13-hour window? Can we talk about what's going on currently within Israel and Iran, Iraq, the Middle East? Can we talk about that? Can we talk about what's going on between Ukraine and Russia still? Like, let's be serious. This is just an attention-grabbing article. That's definitely a massive neglect to try to pin the strength of the dollar on a 13-hour window because Trump won the presidency. I mean, not the presidency, but he won the Iowa caucus. They should not be doing that. I mean, you guys work for Goldman Sachs. You could not implement some other things that could actually impact the dollar during that time frame. The greenback's pronounced moves during that window suggest that Trump's likely focus on trade and international policies could provide a meaningful further boost to the dollar. He's a senior advisor. And I'm glad that this article included the word suggest, because to me, that doesn't suggest that at all. I would have to get more information about what went on within that 13-hour window across the world that could possibly also impact the dollar. They're just strictly going on a small state within the United States, a small Iowa caucus, and the determination of what those people wanted in terms of a president. They didn't consider what's going on across the world. While improving economic conditions would historically suggest solid odds for President Biden's re-election, non-economic factors and the lingering specter of still high inflation could play in Trump's favor. Like, everyone is trying to come out with their outlook and their plan. You see that, right? Because this comes from, I don't know how to pronounce that name, but Goldberg. He's the head of U.S. rate strategy at TD Securities in New York. A Trump victory and split congressional control should push the 10-year term premium higher and may boost equities amid expectations that corporate taxes remain low. Like, everyone is just dropping their hypothesis. These are just merely guesses as to what they think is going to happen in the next couple of months, in the next 11 months, 12 months, when the next president is going to be seated. So how would you digest this article today, though? Like, should you take it at face value? Or should you just kind of, it was a nice read. Let me get back to reality and let's see what's going on into the market. Because apparently, in my presumption, this article will either be invalidated as time goes on in 2024, or it will be seen as the truth. As of right now, to me, it doesn't carry any weight. So let's go ahead and look at the dollar, though. Okay, this actually gives us an idea as to what's really going on. Okay, now what's been going on into the dollar? What's going on? Well, I think you guys can actually see that price is currently trading within the trading range, right? We're seeing buyers hitting the dollar right there around $100 and like 50 cents. See that, right? Now, the dollar is already pretty strong from where we've been since Joe came into the office in 2021. The market has already seen a substantial increase in its value. So maybe Goldman Sachs is looking for the dollar to break $115 to the upside on a Trump 2.0. But here's selling right there. That's where the dollar becomes expensive. And you guys can see there's another area right here. Okay, so let's look at this on the longer term real quick. Here it is on the wiki chart. There's a buy zone right there too. So do you think the market in the dollar is bullish or bearish right now? to me, just consolidating. Let's look at this on the monthly chart. Here it is on the 3 months. 6. Now, because I don't cover the dollar on a daily basis, we would have to look at this on a longer term viewpoint. And to me, it looked like the dollar is a little bit weak right now, especially if we don't see the market break back up above 105, this first sell zone that I created. So let me do this. We're going to go ahead and do a price prediction into the market in the dollar off of the 3 months chart. And this will be our target, maybe around like $95, 96 will be our first target. Then our second target would be here around 94.50. That's 6.37%. Okay. That's what I'm looking at. This is on 3 months. So we'll come back, hopefully, within 2024 and see what happened to the price over the next 11 months. But give me your thoughts though. What do you guys think about that article? And tell me, where do you think the dollar's about to go? Make sure you maintain the profitability. And as always, trade different.